Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Oh, we're gonna do our taxes and we're going to do them right, 'cause the IRS is coming and they're brimming for a fight.
Oh, we're gonna do our taxes, and I think we'd all agree that doing our taxes yearly is what keeps us safe and free.
Hey, Riya, the information on bank accounts for NRIs was so enlightening and so useful.
I so agree, Neel. We should now learn about income tax implications on the interest earned.
Don't you worry, Riya. Today, I have taken an appointment through Charmi to visit Mukesh sir's office at the tax planning house.
Oh, wow! That would be wonderful. Let me search the office on Google.
Hello Neel and Riya, welcome to the Tax Planning House. Well, let me take you in to meet Mukesh sir.
Hello, Charmi. It's nice to have both Neel and Riya with us at this interaction. I'm sure we should be able to help them during our discussion.
Well Mukesh sir, Neel and Riya both are really very keen to learn about the tax aspects related to the interest earned from non-resident bank accounts.
Sure. Let us start with the non-resident ordinary, or what we call as the NRO bank account.
Okay.
Now, when we talk of the interest earned on the NRO account, this interest is treated under the Income Tax Act as income from other sources, and it is liable to be taxed as normal income of the non-resident. But under the provisions of section 195 of the Income Tax Act, it requires to be kept in mind that there is a tax deduction at source which is required to be made by the bank at a flat rate of 30%, and there is no threshold limit. Irrespective of the amount of interest, even if it is a small amount of 100 rupees, the bank would be required to deduct 30%, that is 30 rupees as TDS. So, Charmi, unlike the case of residents, in case of a non-resident, it is both interest on the NRO account as well as the interest on the NRO fixed deposit, which would attract TDS at the rate of 30%.
Well, does that mean that an NRI's interest income gets taxed at 30%? Is there any exemptions limit in this regard?
Well, Charmi, I need to point out that this 30% is actually a withholding tax.
Okay.
And the reasoning and logic for this 30% flat TDS is that just in case the non-resident whom the income tax department cannot catch hold of does not file his return of income here, at least to the extent of the maximum rate of tax that is to be recovered in respect of such income, a withholding tax has been made. But that does not mean that this is the tax payable. We need to keep in mind that just like in the case of a resident, a non-resident, that is an NRI, also enjoys under the Income Tax Act the exemption limit of 2,50,000. And then obviously the tax rates and slabs are as prescribed between 250 to 5 lakhs at 5% and thereafter as the rates go on. But as far as TDS or withholding is concerned, it would be 30%.
Okay.
So what would that mean? It would mean that in most of the cases, the NRI would, if he does not have substantial income from the non-resident ordinary account or fixed deposit, he would be entitled to get and claim a refund under his tax return by declaring the appropriate amount of income and claiming credit for the same. And the NRI can also check up as to what is the TDS that is made in his account, by going on the Income Tax Department's e-filing website, where you have access to see the Form 26AS, or now what is known as the AIS, the Annual Information Statement, with the help of your PAN, permanent account number, and your password. You log in and you will be able to see all relevant details of tax deducted at source in your case.
Well, taxability on the interest earned from NRO account is now very clear. But are the same provisions also applicable in the case of interest earned from FCNR and NRE accounts?
Well, I think you've asked a very pertinent question. In fact, Chami, there is a marked difference between the rule as far as taxability of the NRO and NRE FCNR interest is concerned. As regards the NRE, what we call as the non-resident external account, the savings bank account or a fixed deposit, the interest earned on NRE is completely exempt from income tax under the provisions of Section 10, subsection 4, clause Roman 2 of the Income Tax Act. And there is no financial limit also for this. So irrespective of the amount, you could have maybe crores of rupees of fixed deposit in your NRE account, and still there would be virtually no tax. The reason is because historically the NRE accounts, as we know, have always attracted the foreign exchange brought into India, and the objective, Chami, of the government has always been to encourage the inward remittances in foreign currency. So this is a very special benefit given in regard to interest earned on NRE. And the same scenario applies as far as interest on the FCNR, that is the foreign currency non-resident account is concerned. There is a separate section which is Section 10, subsection 15, clause 4 and subclause FA. So we call it as 10, 15, 4FA, which provides that the interest on an FCNR deposit in the case of a non-resident or a person who is a resident but not an ordinary resident, so not ordinary resident, that is again without any financial limit, completely tax-free. So these two advantages, they have to be kept in mind as far as this provision is concerned. And the advantage is that obviously if you do not have any other income other than your NRE or FCNR deposit interest, then you may not even be required to file an income tax return. You may also, Chami, let both Neel and Riya learn about a smart tip here. Suppose as an NRI, somebody wants to get over the hassle of this TDS at the rate of 30% or filing an income tax return to claim a refund, etc. Well, a smart way to do is, as we saw in our earlier episode, you can convert your NRO account balance to the NRE account, and the limit for this every year is a very large limit of up to 1 million US dollars, 10 lakhs US dollars. So there are many NRIs who prefer that, well, why don't we keep our maximum balances into the NRE account and the NRE deposits rather than the NRO. The reason being because NRO and NRE, the interest rates are almost the same, and therefore it would make smart sense, in planning it in this manner.
Okay.
Now, when you are filing your tax return, suppose you have NRO interest and you also have NRE FCNR interest. The NRO interest, you would show it as taxable. You would at the appropriate rate of tax compute your tax liability, claim a refund if you have to do so, and in such a case the NRE FCNR interest, I think an NRI would be well advised to show this interest under what we call as Schedule EI, that is a schedule where you declare your exempt income in the income tax return. Charmi, this is very important because sometime, when you have to explain to the income tax department the source of your investments, and if you have shown correctly the interest that you are earning on your NRE and FCNR, there is a direct link to that investment and the source of the funds that you have utilized. So these are some of the practical tips that are to be kept in mind.
Okay. Well, this brings us to an interesting question. If an NRI becomes a resident, what will happen to his FCNR and NRE deposit? Can he still claim the exemptions on interest he earned from these accounts?
I think you've raised a very important and an equally interesting aspect which several NRIs, they face. They get perplexed. Now we need to keep in mind that the benefit of exemption under section 10(4) and under section 10(15) for NRE and FCNR interests, they are linked with the status as described under the respective provisions. Now as far as 10(4) is concerned, it says that the NRE account interest will be exempt in the case of a non-resident, and for purposes of this section, it has been explained that the non-resident is to be taken a person who is a non-resident under the provisions of Foreign Exchange Management Act under section 2 subsection W of FEMA. Now when we talk of FEMA, Shami, please keep in mind that while in the Income Tax Act the predominant test is in regard to the number of days the NRI has physically stayed in India, as far as FEMA is concerned, it is not just the days that count, it is the intention which the NRI has in regard to his stay. Now for example, a person who is an NRI may be staying in India for a year or two at a stretch. Now in this situation, if he is just in India not for any business, employment, vocation, etc., and his intention is still to be overseas where he has his house or say his business or some kind of investments and activity there, then obviously judging by the behavior, the test is that he should be treated as a non-resident under FEMA because his intention is to stay outside India. So what would happen in such a case? You will have a situation where a person can be a resident under the Income Tax Act in a particular financial year, but a non-resident under the provisions of FEMA. Now, as far as FCNR is concerned, here again, it's a little interesting and a different scenario. For FCNR deposits under section 1015, the provision for exemption is linked with the status of the NRI with relation to the provisions of the Income Tax Act, and that is section 6. And it says that in the case of a non-resident under the Income Tax Act or a person who is not ordinarily resident under the Income Tax Act, you have to grant the exemption under FCNR in these two cases. But when a person becomes a resident and ordinarily resident under income tax, then his FCNR deposit interest gets taxed.
Mukesh sir, does it mean that for an NRI, the test under FEMA and under Income Tax Acts are different?
Well, as I mentioned to you, Chami, they are indeed different. The provisions of the Income Tax Act essentially deal with the number of days that an individual has stayed in India physically during the financial year, or with reference to the number of days in the preceding financial years within the realm of the provisions of section 6 of the Income Tax Act. But as far as FEMA is concerned, FEMA, as I explained, deals with the intention of the NRI.
Okay.
So this is the litmus test you have to keep in mind.
Okay.
Sir, can you also explain about the residential status under the Income Tax Act?
Oh, well, Riya, let me tell you, when we talk of residential status under the Income Tax Act, it is going to take quite some time to explain. And Chami, why don't we do that in the next episode for the benefit of Riya and Neel?
Sure.